Good evening to everyone present here today. We have with us our CEO and founder, Dr. Mohit Batra, and Chief Investment Officer, Mr. Sunil Damania in today's event. The discussion would revolve around few key trends on the markets. Towards the end, we'll also be having a Q&A session. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome all of you. I know I'm coming after a long period because I was traveling extensively. I was not in India, I was abroad. And hence I could not come in front of you. But today I'm in front of you with the most popular webinar, the future trend. And what are we seeing? In today's webinar, I'm going to discuss about various trends that we are seeing in various parts of the world. In fact, one of the trends also put it just for the benefit of everyone is about the El Nino. What is the effect of El Nino till now on the Indian monsoon? But before I begin this webinar, my very favorite slide is about the disclaimer. As you can see on your screen, this webinar is only for an education purpose to enhance your understanding about the equity market. Please note that when you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future returns. With this, let me give you some of the most happening news and what is the trend that one is that definitely not only in India but globally, the kind of money India is attracting from the FII is making a headlines. And if you happen to read Financial Times, if you happen to read Barrow on Wall Street, everyone has been talking about it. India has been receiving unprecedented interest from the FIIs. So the question comes to our mind, and then trend comes to our mind, that if FI is investing in which sector, what kind of a gain or loss that has been seen because of FI investing in that particular sector. We all know that Fed did another rate hike of 25 bips. Now the question comes, what is the impact of a Fed rate hike on the market sentiment? Is it a cause of concern? Is it a reason to be little pessimistic about the market? So historically, since Fed started hiking rate of interest, on every occasion, how the market behaved post Fed rate hike in next 30 days. So we just wanted to understand, is it more sentimental, temporary phenomena, or there is a little long term? We all know that June result season is out and banks have started coming out with the numbers. And what is the trend that we are seeing is that NPAs are bottoming out. In other words, there is no further scope for the NPAs to move down. That's what we are getting, and I'll come to that. We all know that higher inflation had its own impact on the FMCG companies. Now they were facing some other problem, and then another problem has come on the horizon. And what is that horizon has come? Competition from the smaller players. So I'll cover that. I was reading very interesting slide on my way back to India on a very interesting data point from the RBI, and which clearly says that how large corporate, which used to account for a bigger chunk of the total borrowing pie, has reduced and shrink. So I'm going to discuss about that trend in today's webinar. And of course, and if you happen to be in Bombay, fortunately I was not in Bombay till Thursday, but the monsoon in Bombay has been really very, very bad. In fact, many suburbs of Bombay have received so much rainfall, and I've been informed while I was having a lunch today with Joyson and Mohit, and Joyson was making a statement that the kind of rainfall that we saw in July has been unprecedented. Never happened, this kind of rainfall that we have seen, quantum of rainfall that we have seen. So there is no sign, and I'll show you geographically how monsoon has basically progressed. And of course, Modi yesterday made the statement that India would be the third largest economy in the world very soon. But when it comes to market cap, where do we stand? And what is the progress India could make going forward in terms of that? So I'm going to cover near about 6-7 trends today, just to get you an idea about what are the trends we are seeing. So let me start with the very first one. FPI inflows and allocations to the various sector and impact of that. So if you look at it, almost 1.21 lakh crore has been invested by FII in 2023. First 2 months has been really bad, but I kept saying that the non-linear, not only the returns, even the FII inflows. And every month FII inflows are higher than the previous month in 2023. And it looks like July will also maintain the same trend, where 47,148, anyway at 45,365, so near about 2,000 crore that can be covered in next couple of days. But what is interesting is that, and this is a slide I've taken from ft.com, and of course I put on my Twitter handle also, that how India in 2023 has surpassed not only South Korea but also Taiwan in terms of net inflow. So if you look at this blue line, till here we were negative. So January, February, March, April, May, we were negative zone kind of stuff. And then look at how we have moved up. What does this signify? It's just that we have been saying so since January 2023 that FI will come back very strongly. It did not happen in first couple of months, but then it's just shooting through the roof. And now the question comes to our mind, where are they investing but FI? Itna paisa to leke aage, where are they investing? And you'll be surprised to know that only few sectors are in the top shopping list of FIIs. Which are those? Financial service, automobile and auto components, capital goods, and FMCG. Now, if you combine these three or four sectors, they account for 81% of the net inflow put by the FIIs. 81%. So this money that is coming in is more and more concentrated from the FIIs. Now the question comes, what impact it is having on the performance of the indices? Now very interesting data. And I want everyone to be little attentive here. 35,460 crore has been invested by FII in financial service. When they say financial service, that includes banks and NBFC. And despite putting that kind of a money, the bank Nifty and bank finances underperformed the Nifty and the Sensex. Why? Because Nifty and Sensex has gone up by almost 9%. Bank Nifty is up by only 5.7% and bank finance only by, Nifty finance only by 6.7%. Now the reason is very simple. The reason I am telling you why you need to understand that sometimes the absolute value can be misguiding. Why I am saying so? Because the financial sector itself is very big. To move the needle, you need a very large sum of money to put in that sector to move the needle. Am I right? If the size is smaller and if FI is put in bigger amount of money, then needle can move very fast. And that's a classical example of a auto and auto ancillary. They put less than what it was put by in the financial sector, and yet while the bank Nifty and bank finance is up by 6-7%, 24% gain has been seen by auto sector. The small amount, so sometimes you need to understand whether that sector, what is the depth available. Can few thousand crore putting can move the needle here and there or not? It is true for what we call auto, may not be true for the banking and financials. Something very similar in capital goods. 17,451 crore. Hardly move capital goods, 0.3% only. So, And what has come as a surprise that while despite 17,000 crore being sold by FIIs, as you can see here, am I right? The index is in green, information technology is green in 3.9%. So the point I wish to convey is very simple. Number one, FIIs are investing only 3-4 sectors most of their money. And second thing, look at the sector which is relatively small in size in terms of total market cap. So even if they are going to put 5,000 crore, it can move the needle very, very fast. And that's what I wanted to tell you. So don't blindly go by that theory or the thesis, okay, FIIs have put largest money in financial sector, let me put my money in that. It may turn out to be a counterproductive strategy for you. So this is a trend I wanted to highlight to all of you. Now comes the second trend. Should we at all worry about Fed rate hike? Is it spooking the market sentiment in India and in US? And what I've done, the first rate hike was done on 17 March 2022 by 25, then which increased to 50 and then increased to 75 for 4 times and then started declining 0.5 and then so on and so forth. Now the question comes to mind, what impact it had? If you look at it, the first one was negative -2%. The last 0.75 basis, that is 75 bips, was negative by 2%. And then December -1%. And the last one was 4th May -2%. Now I can clearly see here, if you can see that, there is no correlation between the Fed rate hike and spooking the market sentiment. On the contrary, if you look at the US, the market sentiment did not budge at all, despite Fed was hiking the rate. Now the normal logic says that if you hike the rate of interest, more money will go towards the debt, taking money out from the equity market. But this 1 month, post 1 month Fed rate hike, impact doesn't seem to be. On the contrary, USA did better in terms of as and when the rate hike has been taken place. So sometimes if someone makes you believe that Fed is going to hike rate interest and that's why market will go down, you need to take that comment with tons of salt, not pinch of salt, tons of salt. Why? That may not happen. So what looks correct and academically may not look perfectly fine in the practical life. So that's another trend. There is no correlation between Fed rate hike and market sentiment getting spooked. Now that's the second trend I talk about. Let's talk about the NPAs now. What is happening on the NPAs front? So this is the data of those companies, banks which have come out with that. We are getting a feeling that somewhere the NPAs are bottoming out. This is a gross NPA. Only HDFC Bank since little hike in the gross NPA. All other banks have seen decline in their NPA, but the decline is not so substantial. Okay, it's very marginal. Sometimes it's only decimals. This is on gross NPA and this is on net NPA. And when you look at the net NPA, out of 8 companies that I presented in this slide, 3 are negative. In other words, the net NPA moved up, did not move down, while the ICICI Bank remained at the same level, while 4 banks, especially on the PSU Bank, the situation seems to be improving. We don't know whether trend will continue to or not, and I'll come to that when I come to a very interesting slide about the capacity utilization. So our sense is that NPAs are bottoming out. If I have to come again in front of you, in July 2024, I think these numbers would be much, much higher than what I'm presenting you right now for June 2023. There is a classical case study that normally, that's a very classical way to look at it, is that when the raw material price goes up, and which it did actually, if you look at it, you know, raw material price gone up like this, crude oil and this and that. So whenever the price goes up for raw material, the smaller players finding extremely difficult extremely difficult to compete. Why? Because they would not have a working capital requirement. The working capital requirement goes up. The big players are able to buy and negotiate better. Small players are not in a position to do that. And it starts edging out the smaller players when the input cost goes up. And their ability to pass on also is not so great, am I right? But as we can see, the prices have started now cooling off, am I right? In some cases it is cooling off. If that happens, what happens then? The smaller players start coming back very strongly. Why? Because now they are again back in the game. They can basically buy the cheaper raw material, produce, and push in the market. And this is the slide I have taken from India's biggest FMCG player, Hindustan Unilever. And this is I have taken from their presentation only. Then look at it. Large players in tea grew by X, but small players grew by 1.6X. Same way, detergent bars. Large players grew by Y. It's 3Y. In other words, the smaller players are back in the game, and hence it's going to be a little challenging for the FMCG companies to report volume growth. If you all know that rural economy seems to be coming back, growth in the rural demand is coming back. And as and when the rural demand comes up, probability of consuming brands from the smaller players in the rural economy is very, very high. Am I right? And that's what exactly is happening right now in terms of more and more small players are getting market share at the cost of larger players. Now, this is a very interesting slide that really, in fact, it came as a surprise to me, to be very frank with you, when I was compiling the data, and it really took me by surprise. Why it took me by surprise? Let's look at it. So I put in one slide 2 data points. On the left hand side, as you can see, this the capacity utilization. Can you see this? Average is 74.3. And it has gone up, from after COVID, it has gone up and it's now this one. But on an average, it has been very, very. Normally, as and when the capacity utilization goes up, there is a need for the corporate to start doing capex to meet the future demand. Because demand आएगा, capacity होगा नहीं तो produce क्या करेगा? Am I right? The smart manufacturer will start doing the capex. Now, when you look at it, from 2013, that is the last decade, to 2023, I have taken the data from RBI only. The large industries which used to account for 37% of the complete bank credit. 37%. In 2023, it is just 20%. Look at the decline that has happened in the large industries. Now, why am I linking with the capacity utilization? Very simple. If the capacity utilization is low, there is no reason for manufacturing sector to set up a new plant. फायदा क्या उसका कैपेक्स करके? अभी existing ही माल बिकने जाए तो कैपेसिटी डाल के क्या करेगा? So ideally this capacity utilization should go up, and if it goes above 75, there is a high probability that large, that is which now only accounts for 20%, can further go up. But I was talking about the bottoming out of the NPA, and that's where my worry comes from. Today, whatever the bank credit that is happening, it's all driven by the retail. And look at this data. You'll be surprised to know that in 2013, only 19% was accounted by the consumer housing, consumer non-housing. Today, they account for 32% of the total bank credit. So whatever has been lost by the large industries is been taken over by the smaller, the retail, you and me kind of retail customers. And I think it's a little cause of concern. Total bank credit in a year would be near about 135 lakh crore or 153 lakh crore kind of a stuff. I'm just mixing with 3 and 5 or 5 or 3 kind of a stuff. So that's the kind of, this is that. So it is this one. So I think the large industries will spend money only when this goes above 75. And I think we are very closer to that. Maybe it's election year, so not many would go ahead with the capex. Why? Because there is an uncertainty that could come because of as and when the election. But post that, I think it can increase. That's what my sense is. Now come the El Nino. Now if you ask someone in Bihar, he will say yes, there is a El Nino. If you ask someone in the southern tips of India, that person may say no, yes. But if you ask someone from Gujarat or Mumbai or somewhere, they would say no. Baris hi baris hai. And look at this graph. This graph has been updated till yesterday. So what you see in a green is a normal, minus 90 to this. So this portion that if you can see, these are all green. So सब अच्छा है. But ये क्या है? Excess है. ये excess है. ये भी excess है. And the part of Bombay and this is excess. But there is a deficit. If you can see, this region is deficit, this region is deficit, this region is Kerala, and this place is completely deficit. So right now, monsoon has been good. If you look at just the rainfall. But the spread of rainfall has not been so. So right now one can say there is no defect of El Nino as of today. But can we say there will not be an effect of El Nino going forward? It's very, very difficult to say. Whatever my little understanding about the rainfall, I'm not an, it is called geologist, am I right, Jason, who basically look at what is happening in the weather ka. But whatever my observation over the years has been that if the monsoon has been, if you receive so much monsoon in a very short period of time, there could be a lull in the coming months or coming weeks. That's what I've observed. So I'll be very, very closely observing what happens of the monsoon rainfall in the month of August and the September. Normally season gets over by September. We'll wait and watch about what. Right now, there is no El Nino effect, but it's not time to celebrate either. In fact, I was listening to the Hindustan Unilever con call, and they were also saying that rural demand is a function of what happens to the El Nino. So right now, we need to be little very, very careful of what is happening. Now comes to the India's contribution to the global market cap. And we should all be proud about it, am I right? And I'll show you one more slide where how 1 trillion is getting added quickly to the overall market cap. And before that, India accounts for 3.3% of the global market cap. 44% is definitely Big Daddy, US, followed by China, then Japan and Hong Kong. Am I right? There is a high possibility that India, which is right now at the 5th position, and I think we should be all proud, the country like France, UK, Canada, Germany, who are supposed to be the well ahead of us in terms of market cap once upon a time, we have completely overtaken them. And I don't see a near visibility that they have even a slightest chance to come very close to us. On the contrary, India's share will move from this to this. We will move in the right direction. We will keep increasing. And Hong Kong, my senses will decline, and India would very soon overtake Hong Kong. I am not saying very soon in the sense next 1 month or so, but in next couple of years, India could be at the 4th position in terms of the market cap, in terms of size of the market cap in the global overall market cap. USA continues to be the big daddy and will continue to be. Almost half of that comes only from one country. Now if you look at it, if you total up this, 44 plus 9, which is near about 40, 50, 50 plus 60, 60 plus 70, 70 plus 80. Top 10 countries accounts for 80% of the world market cap. That 80-20 ratio सब जगह लगता है. And that's also reflecting in the market cap data also. So there is a high probability that India would move from a 5th position to the 4th position in the years to come. Now, positive and negative trend. So, what is the positive trend? So, if you look at it, the 1 trillion, the first 1 trillion market cap we achieved, or we did in Jan 2015. कभी किया था? Jan 2015. The next 1 trillion got added in March 2021. So कितना हो गया? 6 साल लग गया. 1983 or 1987 से 2015 तक first trillion बना. It took a long time to do that, add 1 trillion. The next trillion, that is a 2 trillion market cap happened in 6 years time frame. The another 1 trillion, that is 2 to 3 trillion, took only 28 months. And we are predicting, this is my personal opinion, not MarketsMojo opinion. So if I go wrong, to put a blame squarely on me, not on the MarketsMojo. I believe that India would move journey of 3 trillion to 4 trillion in less than 2 years. And that's one of the reasons I was saying India will move from year to year, purely because the growth story that is happening in India. And there is a sign of a worry now for every one of us. The crude oil prices have started moving up. If you read my blog which I wrote in the 1st of July, okay, and that time I did not have a benefit of this, how the crude will behave. But if you read my blog, I did mention that crude oil prices have a high probability of moving up, and that started happening from $69 per barrel. It's going now to the $79 per barrel. So it's surged by 15% in just 1 month. Now what my observation has been that whenever the crude oil price goes up, it does feed into the inflation. Fortunately, China still trying to struggle with its growth and so on and so forth. So there could be a possibility if China announces stimulus, then the world need to again brace for a higher inflation. Low base effect will come in and so on and so forth. So that's a negative trend that we can see as we speak. Some of the major news, as we all know, 25 bips rate hike, no yet get clarity from the Fed, but the market seems to be of the opinion that Fed is going to have done with the rate hike. Russia, again not a great news for us, is going to reduce the discount on the crude supply. Fortunately, IMF revised India's growth, not only India's growth, even for the world economy now, they've revised it to 3% GDP growth, purely because of belief that US, there will be a soft landing if at all there is a landing. No one talking about the hard landing in the US. So I think the situation is improving, inflations are coming under control. But IMF tends to revise that guidance very often, so we might see that could be. Of course, today Ministry of Finance has announced that they are going to consider PLI for the chemical and the petrochemical sector. AMD is said that it's going to invest about $400 million US dollar in India over next 5 years. I think India is going to be the export hub for the electronic and electronic items. FII's love for India continues, and they already pumped 6,000 crore or so in this week itself in India. And despite that, the both Sensex and Nifty close in the red for the week. So in the sense, while even though positive inflow, despite FII's positive inflow, it did not help to lift indices little higher. So with this, let's open the floor for question answer. Mohit would soon join us, so let's wait for that.
Okay, starting off with this first question, this is by Manoj. He's asked that if there's any correction in near future, is that possible?
Sir, correction is a part and parcel of the market. No market can sustain and move up without any meaningful corrections. So, in fact, we should all, if you wish to really want to create wealth, Manoj, we should always be ready for the correction, because once the correction happens, it makes a nice base to have a next leg of rally. If without correction, the rally becomes very, very, very on a shaky ground, and probability of that market falling down increases very, very high. So yes, there is a higher probability that correction can happen, and I believe it should happen. Why it should happen? Because I want market to make a nice base to take a further upside to the market. Having said that, just for the benefit of everyone, we are not changing our guidance for the year end. We continue to believe that Nifty will close somewhere closer to 20,100 by December 2023. Either there could be a time correction, there could be a price correction, and then market go up. But you should expect 20,100 by December 2023.
Okay, moving to this next question by Alkesh. Do you believe mid-cap IT companies will do well in terms of growth in revenue and profits over the next 5 years, or large-cap IT companies?
So, sir, my sense is that some of the niche mid-cap company will do extremely well. I was reading one very interesting article today about this autonomous vehicles, and some of our mid-cap IT companies are very much active on that business. And in the US, there is a limit on how many cars, autonomous vehicles, which is completely driven. There is no driver is needed for that. Am I right? That limit has been expanded by the US regulator. In China, some of the district or the province or whatever the state you can call it, they are allowed the cars to be autonomous, and they are running. Of course, there are incidents or instances of an accident which will happen. I think the belief that autonomous vehicle, that means it should not be an accident. वो तो अगर आदमी भी चला तो होता है ना accident. So I think the case is not कि वहाँ पे accident होता कि नहीं होता है. कितने होते हैं as a percentage? I think that's what we need to see. Otherwise, तो no one should be driving the car because of the accident happening. Am I right? So that argument could be wrong. So now if autonomous vehicles do rise or do take acceptance more and more, there is a high probability that mid-cap IT has a probability of becoming a large cap. Why? Because of the growth prospects. So if I have to say in nutshell, there is a high probability that mid-cap IT can outperform the large-cap IT.
Okay, this next question, this is by Mani. In Saxoft, I have more than 100% gain. Should I hold further or book profits at least partially?
Sir, as you all know that I will not be able to take any questions stock specific on the webinars now because being a CIO of PMS, SEBI guidelines very clearly say that we should not be discussing stocks. Why? It may amount to be suppose today if I say ABC Limited आप hold करो या buy करो, and tomorrow I might advise you to exit, maybe Monday or Tuesday, which I don't come and inform you. And our PMS strategy will do that. SEBI will think that I have basically wanted to get out of that company. That's why I've given a very positive so that you people can buy and I can make an exit for our customers, which technically is wrong. Am I right? So we have taken a conscious call, and SEBI also says very clearly, I will not be able to answer on any company specific. If at all, sir, if you have to exit that company, use a score. If you are a MarketsMojo customer, if you are a Mojo Infinity customers, we will tell you when to exit. And if you are a PMS customer, we will again help you when to exit from that.
Okay, moving to this next question by Mr. M. Putankar. Some major state elections and general elections are coming nearer. There are chances market may see significant selling before elections that may affect the movement of the market. Your view on this aspect, please.
So, sir, I have looked at various elections in my life. Assembly elections. What happened to the Karnataka assembly election? Did the market corrected post, despite BJP not forming the government and losing and giving its control to Congress? The answer is no. So if at all there is a impact, I'm saying that if at all it's not going to be more than one day, whatever positive or negative, I'm not going on to who is going to win the election, but one could never ever make in their life a strategy based on outcome of likely outcome of a assembly election. कभी मत करो लाइफ में, because it's a futile exercise, it's not going to have any meaningful impact, and then you'll repent why I did that actually. So I am not an expert on the election outcome, but based on my experience, don't expect more than one day impact on the sentiment, both positive as well as negative. And remember, market will then start discounting about the general elections, am I right? Which will be due in 3-4 months, and in fact, the election would be due in 3-4 months, but the activity on the ground will start happening. We have already seen the opposition party forming an new alliance called India, and that's anyway happening. So I think we are going to see a lot of political activity, a lot of political noise. My request to all of you, please record this conversation, what I am saying. My request to all of you is that please don't get carried away by the noise that's going to get generated in next 9 to 10 months because of this election. Remain calm, compose, focus on your investment strategy. This noise, once election gets over, is going to subside, but your return on equity should not be a function of what's going to happen in the noise. So I have never ever in my life taken a decision based on what's going to happen on the outcome of the election result. वो आपको noise value है, उससे ज़्यादा कुछ नहीं है. We have seen that happening in 2004, that we have seen happening in 2009, we have seen that happening in 2014, that we have seen in 2019, and we'll see something very similar happening in 2024. So please, please, please avoid the noise as far as possible. Do not listen to the political debate happening on the news channel. They want their TRP to be high, and hence they will make sensational statement and every so and so forth that you get glued to it. Even they don't have any idea who is going to form the government next. And it's very difficult to read the mind of an Indian electorate. Whether you like it or not, it's very, very difficult to understand. Who could have thought that in 2004, Bajpayee ji will not be able to form the government again? Who would have thought? No one. And who would have thought in 2009 again Manmohan Singh will again become a prime minister? So your decision to do that is really not decision to take a investment decision based on the election result is really not worth the effort.
Okay, this next question by Archit. Is there a worry that private bank sector's net NPAs have increased? What should we do in stocks like these?
So our in-house view has been quite consistent since January 2023. Some of the private sector banks will see their NIMs coming under pressure and NPA moving up. That we have said in the past, we believe that it is going to happen. The worry also comes from the very fact that some of the retail loan, and within the retail loan, some of the unsecured loans could cause some amount of a pressure on the banks, and hence we need to be a little careful with that. But having said that, should we get out of all private sector banks? Answer is no. Some of the private sector banks we do own in our portfolio, and the reason why we own, because we believe that it can do well.
Okay, this next question, this is by Sudha. Please advise if stock prices of all producing domestic companies would be expecting to increase next week. Any opinion on this?
All producing domestic companies expect to increase next week. Stock price of oil producing company increasing next week. Sudhaji, I believe you are trying to do trading or something. Okay, you want to know what needs to be done in 1 week or so and so. I think it's not, you should not be doing that actually. My sense is that of course oil prices have gone up, which I've shown you there. So of course they will get the benefit if they are oil producing company. So it's very logical. But then we also need to understand how much windfall tax government can levy due to that. We need to be very cognizant of that fact also. So, but 1 week, I wouldn't like to comment. Whether they go up or they go down, I'm not an expert.
Okay, this next question, one of the investors, on what two sectors you're bullish for? Actually, when he's asked for the short term.
Sir, आप तो SR के हो. So, see, our view has been very consistent since 2023. I'll not give you two, I'll give you two more bonus also. We believe that IT and pharma risk reward is in favor of a reward. We do believe that capital goods sector should do extremely well because of government focus on infra, so that we believe do well. And I think defense as a play will continue to play out very well. So sir, instead of two, I gave you 4 sectors which we believe. Now only thing I want to put a caveat there, these views are not for the short term, and I don't know what is the definition of short term and what is the definition of a long term. I'll give a very classical thing which happened with me, funny incident that happened with me, which I stated in my previous webinars also. There was a India versus Australia quarter final or final was happening in Ahmedabad. India versus Australian cricket ka World Cup ka. And I was, previous day I was traveling to Ahmedabad for my office work because I was addressing some invest gathering in my previous organization. So, you know, before the flight takeoff, you always have an advantage to talk to someone, and I was talking over the phone, and person who was sitting next to me was listening to my conversation without me knowing about it. Of course, one should not be naive. Of course, people will listen to your conversation. People are more interested in others, what others are doing than themselves. So he was listening to me. And then ultimately the flight took off and I had to put my mobile on the aeroplane mode. And the moment I put down, he came and, hello, how are you? And he started talking in Gujarati, but I'll say in English for the benefit of everyone. Or Hindi, I'll say, अरे आप भी इन्वेस्ट करते हो स्टॉक में, मैं भी इन्वेस्ट करता हूँ स्टॉक मार्केट में. But I'm a long-term investor. I was really happy. Then the second statement he said, I hold for at least 15 to 16 days. So that's a kind of a definition. So sir, I don't know what is your short-term meaning. Is it for 1 day, 3 days, 5 days, 3 months, 6 months or 1 year? But we do believe that in next 12 months, IT should do well, pharma should do well, capital goods should do well, and the defense should do well.
Okay, moving on to this next question by Santosh. What is the industry outlook for paper stocks? Most of them have declared good results, but no rally is seen so far.
So, Santosh ji, I think the risk reward we continue to believe is in the favor of reward for the paper company. One prominent paper company that we do own in our portfolio did come out with a very good set of numbers. It did move up on the day of result, and then now it's basically more or less moving in a narrow range. But I think the risk reward definitely is in the favor of reward. So at this point of time, it doesn't make sense to get out of a paper stock. That's what my personal opinion.
Okay, and also you mentioned pharma would do well. Rajesh has asked, why do you suggest that this sector could do well?
So there are a couple of things, sir. If you look at the prices of generic globally, especially in the US, which used to decline, has now started becoming more and more stable. Number one. Number two, some of the great products which are under patent are coming off the patent in next couple of years. That will further drive the demand for the pharma. Number three, if you look at over the last 1 decade or so, the earnings has happened in the pharma companies, but the market cap has not increased. So due to that, the valuation becomes so attractive for them that they now from this level, they offer a very good opportunity for the capital appreciation. If you remember, not for the month of July, but for the month of June, we selected one stock of the month, which was from the pharma sector. It was a large cap pharma company, and it's up by 20%. Now I must tell you that at that point of time, pharma company, when we recommended, it was a contra call. Why it was a contra call? Because every analyst was saying, this company can't do well. Company came out with the numbers for the June quarter, and the numbers are really good. And post numbers also, the script moved up. So when there is so much pessimism about one particular sector, then probability of you going wrong is goes down. I'm saying probability, no certainty. Am I right? Because all negatives are there in the price, and if something happens, even 1% positive, it can have a very big, good impact, positive impact on the sentiment, on the price, and hence we believe. So generic prices, number one, and number two, many patent products are going out of the many products which are going out of the patent, which will open a huge opportunity for Indian pharmaceutical company to cash it on.
Okay, this next particular statement by Arun. Hi Sunil, don't you think time needed for incremental trillion should also consider the base, as an increase from 1 to 2 is 100, 2 to 3 is 50 and 3 to 4 is 33. So it's natural that it will take less time when moving from 3 to 4. Factors like growth, inflation will also impact. So don't you think projecting a move from 3 to 4 trillion in 2 years as a great achievement is simplistic?
So Arunji, let me answer the last part first. We always, think a solution which is simple is not worth considering. In my life, the simple solutions are more effective than the complicated solutions. Am I right? So somewhere we have been taught, I don't know, somehow, कि जो solution जो simple है ना वो थोड़ा worth नहीं है, or we should basically ignore it. So distinctly recollect one incident. Someone said, I don't know whether it's a real incident or not. I happened to read on social media which says, so someone goes to a car mechanic, and somehow he has not been able to fix his very expensive car. He would have visited, or he would have called various experts to repair his car, and everyone failed to give a satisfaction to him. Finally, he found someone, and this car mechanic, within 2 minutes, repaired the car and said, my bill for this is $1 lakh or $50,000. I'm just giving a number. Okay, he asked for a very high amount. Point I wish to convey just to realize it is very high. Asked for a very high amount. And he said, boss, it's just a 2 minutes it took for you. So it's not a question of 2 minutes. It is a question of I knew what to do, which is came based on my experience. The same way, the 2 years, I am saying less than 2 years, not necessarily that market can move in a narrow direction. If you look at decay, for 3 decades has moved nowhere. So, what looks simpler, ये तो होने ही वाला है. Which looks very, like someone can say, आप लोग बोलते 20 तो होने ही वाला है. अरे, that's not necessarily. Market can move, come back also, am I right? So, जरूरी नहीं है कि 2 साल में जो बोल रहा हूँ वो बहुत simplistic है. What reason I am saying so, because you people are saying, अरे ये तो बहुत simplistic है. Simplistic नहीं है sir. बहुत thought process गया उसमें. Why am I saying so it will happen? There is no guarantee in the market कि it has to move up only. कोई है क्या thumb rule ऐसा? या कोई है आपके पास जो उसको market has to go up only? It can move. It can move in a sideline for many years. If you remember, from 1993 to 2003, I think it was a lost decade for the Indian market. Market moved nowhere actually. Am I right? And something can happen. Then why am I saying 2 years mein ho jayega? Reason is very simple, because of India's growth story, India's PLI, demographic dividend, higher standard of living. These are all going to make reforms. The infrastructure spending is all going to make, and that's why I believe, yes, it looks very simple. Am I right? But it is not so simple, sir. Like a commentator bolta na, oh, it was so simple, he would have thought about this is, and why did he not think? It's a common sense. Sir, the common sense is very uncommon, unfortunately, in this world. In fact, I don't know why it is called common sense if it is so uncommon. That itself is a debatable. If it is not so common, then why should we call it common sense? Am I right? Then it should be called uncommon sense. Isn't it? So, sir, yes, I believe it will happen. Yes, it sounds simplistic because I presented it in simplistic manner. A lot of thought process has gone to make it this prediction. And I could go wrong also. I'm telling you that also. Not necessarily what next 1 trillion will ho jayega in 24 months. Possible, jaruri bhi nahi hai. Market can go down also. India can lose its market cap also. It can move in sideways also. And we may not see happening. Sir, in 2 years, 3 trillion becoming 4 trillion, we are talking about 33% jump in the market cap. It is not easy. Remember, try to understand that.
Okay, this question by Kedar. So, good evening. Though FIs have put money in certain sectors, does not mean they allocated equally in each company. They would have put in selected stocks which are the best performing in that sector. Do we have any company specific data to make some conclusions here?
So, Kedar sir, we don't have the data. Only data will come to know once the company declare their all the company declare the June numbers, and then we can compare where have they. So that is all available in the public domain. So maybe you can look at company wise where FIs have put money. But it's a good suggestion, Kedarji. Maybe let me try to find out next week if I can put some data over December to June, June to December, that is December 2022 and June 2023, where all FIs have increased the stake maybe and where they've decreased the stake. It's a good insight. Yes, we can get some data. But that only thing, the worry is that that data would be as of 30th June, not as of 31st July.
Okay, this question by Dr. Nivesh. Why Indian market is going upwards when the worldwide sentiments are struggling?
Sir, I don't know which sentiments you are referring to. On the contrary, I think the sentiments across the world is much better than what it was there 1 quarter back. No one now talks about soft landing in the US. Inflation in the US, in the UK and in the ECB have started declining. There people are more optimistic about the world growth. In fact, IMF has also revised the world growth higher. So, and in fact, the longest ever rally in the US market happened and just got concluded yesterday. 13 or 14 days in a row, the US market moved up, which is a record. Had they gone up yesterday also, it would have broken more than 100 years old record. So I think, sir, market across the world are in a much better mood than what it was the previous one quarter back. Why? Because inflations are coming down. There are no longer talk of higher rate of interest going to increase, and world economy seems to be shaping up extremely well post higher inflation and Russia-Ukraine war crisis.
Okay, Mr. Sunil, that's it with the Q&A session for today.
It seems that, sorry, my apology that Mohit could not join. I think he got stuck with the meeting, and I think that meeting would have extended beyond his imagination. So anyway, thanks a lot everyone taking time out. Do write to us with your feedback on our trend analysis. Do suggest what trend you would like to cover us, as some Kedar suggested. Why can't you look at company specific also? More than happy to share that also. Please do give your suggestion, feedback to make our webinar more interactive. With this, thanks a lot everyone taking time out. Have a great weekend. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil, and thanks a lot everyone for attending today's event. We'll also be sending you all the webinar invites for the next week shortly. Goodbye and have a great weekend. Thank you so much.